Welcome to today's broadcast. My name is Colleen Patterson, and I am the Director of Employer Services and Compliance at Savoy. I wanted to take a moment and just say thank you to everyone who has provided feedback and sent in questions. Please continue to do so through contacting your dedicated Savoy team. Many of our broker partners have asked if our information can be shared with their clients. We feel a social responsibility to help all of our partners and communities to the best of our abilities. Therefore, we have made the COVID-19 resource page on our SavoyAssociates.com website public. So yes, please feel free to share as you see fit. Since we are continuing to get questions coming in, we felt that it was important, at least for now, to continue the broadcast daily. So for today, we are focusing on which employers must comply with the new act, employer tax credits, carrier eligibility, and just what to expect next. So let's get started. So the first question is, I am an employer with under 50 employees and I am not subject to federal FMLA now. Do I have to comply with the Emergency Family and Medical Leave Expansion Act? So the answer is yes, but here's why. The same FMLA eligibility and benefit in place prior to the emergency expansion of FMLA is unchanged. So the current portion of the FMLA applies to employers with 50 or more employees. That's not what changed. Here is what actually did change. What's changed is the eligibility for the Emergency Family and Medical Leave Act expansion. On a temporary basis is effective April 2nd, which is when the act takes effect. The Emergency FMLA Expansion Act amends the FMLA and creates a new leave entitlement. For purposes of the new entitlement only, the act alters the definition of employer to include all employers with 1 to 499 employees. Therefore, small employers who were not subject to the federal FMLA requirements are now subject to this temporary expansion of FMLA. Employees who have worked for the employer at least 30 days are eligible to take leave should he or she be unable to work or telecommute due to the need to care for a son or daughter as a result of school being closed or childcare is unavailable. So this actually leads to the next question, which goes along with that dependent component, dependent being the child care for a son or daughter. So question number 2, we currently offer our employees dependent care accounts. What will happen to dependent care accounts during prolonged periods of leave? This is a great question. So current IRS rules that govern dependent care accounts require an employee's pre-tax dependent care contribution election to be irrevocable, except in the case of a change event. So that begs to ask the next question was, all right, so what's a change event? A significant change in childcare cost is a change event that would allow an employee to change his or her dependent care contributions mid-year. So for example, an employee whose child is now at home because the child's daycare closed has experienced a significant change in cost and could decrease his or her dependent care contributions or revoke them altogether. Conversely, though, this change event would also allow an employee to increase his or her dependent care contributions when the daycare reopens and the employee is back to work. So the third question that's come in is, I heard that the new act includes tax credits. For what size employers does this apply and what's the actual credit? Another good question. So the answer is, first thing, probably the most important, is be sure that you familiarize yourself with the requirements under the Families First Coronavirus Response Act provisions. That's really critical. You can do so by referring to the chart that we have made available in the Corona-19 resources section of our website. And again, that's at SavoyAssociates.com. To answer the size question, it's affected employers are employers within 1 to 499 employees. So let's talk about this tax credit that's happening. The U.S. Treasury Department, Internal Revenue Service, and the U.S. Department of Labor announced in a news release that was sent out on March 20th that small and mid-sized employers can begin taking advantage of 2 new refundable payroll tax credits, and they're designed to immediately and fully reimburse the employer dollar for dollar for the cost of providing coronavirus-related leave to their employees. So eligible employers will be able to claim these credits based on qualifying leave they provide between the effective date of the Act, which again is April 2nd, and December 31st, 2020, which is when the Act sunsets. Equivalent credits are available to self-employed individuals based on very similar circumstances. As I mentioned just a moment ago, this chart that's on our website. So the chart that we've created goes into detail about the credit for paid sick leave. I want to point out, though, that eligible employers receive 100% reimbursement for paid leave pursuant to the Act. It also notes in this notice that came out from the IRS on March 20th, health insurance costs are also included in the credit. Employers face no payroll tax liability, and again, self-employed individuals receive an equivalent credit. So the next logical question to these credits, which is question number 4 that we've gotten most frequently, is when and how quickly will the employer be reimbursed? Great question. So the same news release that I referred to just a few moments ago also addresses prompt payment for the cost of providing leave. When employers pay their employees, as we know, they are required to withhold from their employees' paychecks federal income taxes and the employee share of Social Security and Medicare taxes. That happens already today. The employers then are required to deposit these federal taxes along with the employer's share of Social Security and Medicare taxes with the IRS. And they do so and file a quarterly payroll tax return, which is called a Form 941. So again, that's all stuff that employers are doing today. Under the guidance, though, that will be released later this week, eligible employers who pay qualifying sick or child care leave will be able to retain an amount of the payroll taxes that is equal to the amount of qualifying sick and child care leave that the employer paid out, rather than deposit those taxes with the IRS. So that's where the credit comes from. If there are not sufficient payroll taxes to cover the cost of qualified sick and child care that was paid by these employers, employers will be able to file a request for an accelerated payment from the IRS. And the IRS expects to process these requests within 2 weeks or less. Now, there's going to be more details that's released on how this expedited procedure is going to work, and we do expect that information this week. So the last question that has come in, and honestly, this is probably on the minds of every employee and employer that is affected by the current pandemic. And that question is, are carriers allowing furloughed or temporarily laid off employees to remain on the plan? This is an excellent question too. And the answer is, and we've been seeing this over the weekend and certainly throughout the day today, carriers are beginning to implement exceptions that do allow furloughed employees to remain active on a group health plan. As we've discussed in previous broadcasts, employees who are not actively at work and they're not working the required number of hours to satisfy eligibility requirements under the plan and who are not on protected leave, they do lose eligibility to remain on the plan. But carriers are fast and furiously sending out information and they're addressing this. So we do expect to have all of this information compiled where we will release that through our FAQ on the COVID-19 section of our website. So we've covered a lot of information on today's broadcast. I will be posting these questions that we talked about and the answers on our COVID-19 resource section of the website. So what can you expect for the coming days? What's next? So we will be doing a broadcast this week focusing on how the carriers in our markets, and we're defining the market as New Jersey, New York, Pennsylvania, and Delaware, how these carrier partners are handling eligibility and any other administrative concerns such as premiums. So definitely keep an eye out for the next broadcast as we will focus on that. Also, this week, you want to look for guidance from the Department of Labor and/or the IRS regarding tax credits. So as soon as that information is made available, we will be making that available on our website under the COVID-19 resources section. Should you have any questions, please continue to reach out to your dedicated Savoy team. And please be sure to visit our website at savoyassociates.com to stay up to date with all of the information we are releasing. One thing's for sure is it takes an amazing team to navigate uncharted waters, and we are so grateful for your partnership and for putting your trust in Savoy. We remain committed to helping all of our partners and associates navigate these unsettled times. From all of us here at Savoy, stay healthy and safe. Thank you for joining us today.